Hello friends, this is Dr. Mukundkulkarni back again. It's my second video on the series of training videos which I intend to publish free of cost for all you guys interested in knowing these concepts and details on health insurance and its various dimensions. Thank you very much for all those people who attended my first video on data analytics and life insurance, and I believe in less than a week I got more than 100 views, and I really sincerely thank you guys for that. So in the second video today I thought let me pick up a topic which is pretty sensitive to every health insurance company today, as well as its subsidiaries who help health insurance companies in containing costs on a very high level. And I thought let me talk about this more from a concept perspective and not really a document which helps you understand the current statistics and the various extent of losses or extent of impact due to health insurance losses today. So don't expect a lot of slides, a lot of information on statistics or numbers here. I'm just going to stick straight away to the concept of what do we exactly mean by losses in a health insurance portfolio, and what are the types of losses. And as we talk about this subject, we know each one of us know, and we keep seeing this in a lot of news, as well as we see this being talked about in a lot of conferences by key speakers about what is the extent of fraud, waste and abuse today in health insurance. And of course every day as it passes there will be a change in the impact and the extent of losses due to these causes. It's important to understand, first of all, when we say losses, we do mean those segment of financial component which should not have been there in an ideally priced policy or an ideal expected portfolio of an health insurance product, and because it's ideal, it is too optimistic, and there will be some aspects of losses. Now whether those losses can be priced for very much in the product, yes, to some extent, but again what's more important is that segment of losses is going to be flexible from an operational perspective to mitigate, and people who have smarter ways and smarter technology used to detect and constrain those kind of losses are doing pretty well when it comes to operational portfolio management in any health insurance. Of course, they also provide a lot of feedbacks to the pricing team as well as to the underwriting team, which are more prospectively placed in controlling losses. Before we jump into the specifics of the model, it's important to understand that these losses can be classified into waste, abuse and fraud when it comes to health insurance or medical insurance, as it is termed in a couple of specific geographies, and there are clear differentiators for each of these three categories. So when we talk about waste, it is not an intention which is to defraud the insurance company to a very big extent. In fact, the intent is going to be almost nil, or it's going to be minimum, and hence we see losses in this category happening mostly due to administrative errors, like there's a duplication of claim, or there's an unbundling of a procedure, or the coding errors which result into excessive payments. But again, as I said, the key differentiator is the intention is pretty low, almost nil, to defraud an insurance company or the entire healthcare system. In the middle, and that's exactly where you see maximum impact or maximum number of cases coming up, is a category called abuse, and here there is an intention to defraud, and however the intention is not as bold as it is in fraud, where the only intention is to defraud a company. And in abuse, the intention may not be really to defraud an insurance company specifically or directly, but it is more to gain out of the financial gain out of the current infrastructure or the processes which are operating in a health insurance claims process. So for example, a provider can do multiple procedures in the same surgical setting, which may be allowed by an insurance company, but there can be fine technical indications which are mixed up or kind of justified in a different fashion for separate procedures, when ideally they could have been done in a single procedure and resulting lesser costs. Same thing with bill splitting or upcoding or some of the procedures, or a presentation of a medical information in a way that it attracts much more financial gain than ideally it should have been in an ideal scenario. Coming to the third category, which is the fraud, which has got the highest intent or 100% intent to defraud an insurance company based on its current policy, which has been issued to the customer. And this fraud, it can be as blatant as an identity misrepresentation, or it can be a misrepresentation of a claim, which means there's a completely feigned event, or everything created only on documentation. Now this is very clear that the difference between this and the abuse is the intent to defraud is pretty strong here. Now in the bargain, there can be some opportunities to the insurance company to pick up triggers, and hence I would always say that though FWA is always spoken as one category, the triggers for each of them are different. And when it comes to investigation triggers, or identifying these triggers, or integrating them into the claims system, or automating claims management with the help of trigger based triaging systems, it's important to understand that these three categories are completely different, and hence the triggers are also different. So that's just to introduce what exactly is the cause of the category of causes of losses in health insurance, and then we will talk about details in this presentation about the concept, the definitions, causes, the levels of causes. Now this is important. It's not only important to identify a specific cause, but we need to put those causes into separate categories and levels. And why that leveling is important is because we need to somewhere allot weightages to each of those levels, right from the losses which are considered to be less in weights compared to the losses which are supposed to be very high in weightage. And again, the proportion of operational processes to be implemented to counter these losses are going to be in proportion to the extent of weightages in each of those losses, and hence categorization of the losses in different levels is crucial. And then we'll talk about, again, I'm going to talk about the concept of the claims audit model. Now here is where an insurance company needs to kind of perform a process which detects the extent of losses. Now at an individual level, that is at an insurance company level, it can help bring on the extent as well as the levels of causes resulting into those losses for a particular product or portfolio. But at a regional level, specifically for multinational insurance giants where they have multiple country businesses, this model can help them benchmark as well as identify the specific geographical causes of losses, also identify the specific best practices resulting into lower losses in some other geographies, to share them across their regional control or global control. So claims audit model, again, it differs as per the purpose why it has been implemented. At a particular instance, if it is deployed more for finding out the first level extent of losses in a particular insurance company, then it will be as superficial as possible. But when it comes to the purposes which are more aligned towards benchmarking and comparing different insurance companies or countries for their losses as well as their operational successes, process benefits, then the model will have parameters which are much more deeper, and they're much more, I would say, multivariate than univariate. So we'll talk about this model as a concept, and we'll then at the end we'll also talk about how this claims auditing processes have progressed over a period of time, and how newer concepts and advancements, and I'm going to talk specifically about some of the rich technology tools which are available today, like artificial intelligence and machine learning. They can definitely be applied to the model of claims audit. So I think talking about the definition and the concept of loss in a health insurance, we invariably practically mean leakage. And why we say that word leakage is because that is something which is not expected to happen, number one, or less expected to happen, because we can still have the pricing team accommodate certain aspect of leakages in the price of the premiums, but again, that is not something which is objectively priced from a data, and hence there's always a scope of influencing the extent of leakage. So it can be called as not expected to happen. And the third thing why we say it is as leakage is there's operational opportunity for every insurance company to reduce that to whatever extent they can. And because we are talking about a model where at the end of the day it will be telling us the extent of leakage in an objective fashion, we need to define leakage. And that's how we try and define here, saying is the amount of claim paid or overpaid as per the policy sum assured compared to what should have been paid as paid or overpaid as per the policy terms and conditions respectively in an ideal world. Now the next question which will come to your mind is what is an ideal world? And there is nothing called an ideal world. Because there will be dependencies on multiple stakeholders who are operating in the health insurance framework today. So one of the big problems, and we'll talk about that as one of the big causes of leakages today, is provider driven leakages. And in many of the countries we see the providers work independently and they really don't have the decision making influence or decision making what you call as agreements or association with the payers today. And even if there are such mechanisms today, the extent of viability for those kind of association, as well as the extent of control which the payers have over providers, is always a question mark in every geography today. And that is why it's important to understand that there cannot be an ideal world. What we see here is try and make an attempt to build what is more ideal by using these kind of audit driven recommendations as well as best practices which are available across the various geographies in a customized manner. And obviously more important is use of technology tools as well as advancements happening to try and create as idealism as possible in a health insurance leakage driven activity. And again, leakage rate is nothing but the ratio of the leakage for the claims to the total amount for claims in the selected sample. Now again, this is a problem when you say selected sample. The extent of the sample to be representing the entire portfolio is always going to be a challenging question. And if we really look at the statistics of claims rich data, it is always something which is not comfortable for us to say that the confidence levels based on the sample audits are to be extrapolated to the entire portfolio. And the reason we say that is because it's not a static performance which gets replicated in the current and the future scenario based on what has happened in the past, because medical advancements keep happening and they keep influencing the guidelines, clinical guidelines, as well as the doctor driven decisions in the future. And hence I would say that even if we talk about extensive sampling in a health claims data to be used for audit purposes, but it is still not going to be a true reflection of the portfolio. Nevertheless, the exercise of detecting the leakage rates is going to help us provide recommendations in both areas. One is in the current, if we keep the second part, which is let's say the pricing part constant, we still have operational recommendation to reduce the leakages, but it also gives us a feedback to change our pricing methodology or pricing philosophy to incorporate certain trends which probably would keep happening based on the experience which has been studied in the audit. And it's a much specific and much valuable information feedback to the pricing team to accommodate that for future health event pricing perspective. And what is also important is, because we are coming down level to a specific process being designed to identify leakage rate, it's important to know that the leakages should be classified into certain types. Now this can be classified as hard leakage, soft leakage, process error, commercial decision, or underpayment. Now underpayment probably is an exception. We can't call it as leakage because here is a shortfall in claims payment, but it's definitely it's got a potential to leak later on, because if it goes into a consumer forum or a legal situation, probably you not only pay the claim amount if you're proved wrong for that kind of error, but also you pay a lot of compensation and additional amount, which probably then becomes a leakage type here. Hard leakage is definitely the primary category of leakage which we want to detect from the claims audit process, and it can be described as a technical error clearly resulting into a loss or resulting into clear loss. Example is exclusions. The policy exclusions based on certain pricing methodology and certain other justifications which need not be covered but has been paid, and there have been computational errors also which can result into hard leakages. Though they are simple administrative errors, but at the end of the day they've resulted into leakages which are pretty much black and white, and hence they should be classified as hard leakages. Soft leakages and process errors are basically the ones which result out of inefficient processes, and they may not be as black and white or as hard leakages, and sometimes they may not be probably pretty much obvious as a leakage, but they definitely can show potential possibility of a leakage in near future or a subjective loss. And if from an operational perspective there are valuable feedback to make corrections, and if those corrections are not effective, then they definitely can get converted into hard leakages in future. So it's important for us to identify some things which have got high potential to contribute to hard leakages in future, and that's what we classify as soft leakages or process errors. And some of the examples of soft leakages can be probably expert opinion not taken. Let's say there was a complex medical case and there was a requirement of expert medical opinion in that case, but it was not taken, and a non-medical assessor would have probably processed and decided over a claim. Now the outcome of involving an expert medical opinion may, we don't know at this moment, may have resulted into probably further more information and either a denial or a reduction in the claim amount, and that's what we call it as soft leakage. That it has not resulted directly into a leakage at this moment, but it had a potential to indicate that there could have been a better way of handling this claim, and if similar claims happen in future, they will definitely then become a hard leakage. Obviously, some examples of process error would be their typical guidelines which are issued for the claims assessors, which are not being followed in a particular claim, and had the guidelines being followed, probably there could have been some more information or some more process steps resulting into some possibilities of reducing the claim leakages. Commercial decision, the fourth category of leakage rates, are some things which are done completely out of policy terms and conditions, and they are they have been taken by the company consciously, either because of the situation being very humanitarian. Unfortunately, the policy terms and conditions are becoming a hurdle or an obstacle for covering a very serious or grave event like a life-threatening or a limb-threatening event. Or it can be a conscious business decision taken by the company because they don't want to disappoint their, let's say, key distributors who can bring in or who have got a high impact or influence in the front line, and that can be a business decision taken. Or it can be sometimes local practices. Now again, as I said, the tripod of provider, customer and payer, if they're not tight enough when it comes to control, there is a high possibility that local practices develop where somebody takes the predominant decision making authority. And in many of the growing countries, you see providers, they completely are disconnected from the payers, and they are the ones who drive the decision making authorities, and they drive the processes of healthcare services, leading to much more or uninformed or uncalculated accounts for the payers to handle. And these local practices can be specific in certain areas, it may be probably generic in certain areas, it may be pretty much safer in some areas, and it's a completely different topic to be researched and deep dive in each geography to understand those things and then look at how they impact an insurance portfolio. But whatever commercial decisions have been taken, generally we see the insurance company tries to keep this separate in accounting perspective. They don't mix it up with the policyholders fund, which has been used for pricing. But again, it's important to understand that commercial decisions are not something ideal, because they're not being priced for, and they're not something which is in tune with the coverage aspects, and it may probably even sometimes be an injustice to genuine policy holders if there are a couple of commercial decisions made which are very clearly not as per the ideal situation. So having understood the different types of leakages, we will now move on to see what exactly should be the model to identify these leakages, identify the leakages and their causes at a very detailed level. Now, if you really try and think about and also analyze from the experiences health insurance companies do have, the losses can be categorized into these causes. For example, there can be a loss which is happening because of the process of claim adjudication, and that's why we all put that under claims process category. If the losses happen because of the bad policy construct or not so great policy construct or some of the gaps in the policy construct, we put that into the policy category. Claims assessment, even if the claims process may be fine, but because it is still an individual assessor's responsibility or an outlook, the way he looks at the information provided at the time of claims, as well as it tries to connect with other information like underwriting information, policy servicing information, and the risk which are associated with them. Plus, nowadays people are trying to even tap the information available in external media like social media or third-party data. So the assessor has got his own style or his own way of looking at a claim, and there can be an inter-observer variability. Now, errors which happen or deviations which happen in the claims assessment process leading to leakage should be categorized in the claims assessment. And mind well, these are some of the very, very big category of causes today in health insurance claims losses. Claims payment, now, which is more transactional nature, you followed the process, but you followed the true guidelines for assessment, and you made a reasonably optimal decision to pay a claim. But however, the claims payment process, which can include the interfaces for payment gateways, it can include the banks, which can include false information provided as a beneficiary, they all should be categorized under claims payment. And provider driven causes is one of the biggest category of losses today. And again, as I explained earlier, there can be reasons like the tripod or provider, payer and customer is not very stringent enough. The insurance companies don't have much technical or decision making control over the providers for the healthcare services. The regulations still have gaps there, and every country is working towards that, killing those gaps and making a very synchronized platform between the providers and the payers today to mitigate these risks. There are a lot of advancements happening here, in also where the kind of contracts which providers get in with the insurance companies are now looked after from an outcome perspective rather than the indication perspective. Traditionally, they have been more on the indication perspective, where a person who is a policy holder gets diagnosed of a condition and the services are aligned to those conditions based on the prevalent clinical guidelines in an ideal scenario. However, today what's happening is a lot of people are not getting benefited despite so much of investments in healthcare services, and the outcomes have not been great. So there's a huge development happening in the space of outcome-based contracting, or OBCs they call, and this can benefit the insurance companies, and this can also benefit certain other players in the healthcare ecosystem, like let's say pharmaceutical companies or medical device making companies, who if are a part of the payment processes can probably look at this kind of contracting to control costs and reduce the prices of their products on a long-term perspective. There can be losses due to regulatory and legal aspects. Now this is a little strange, but then if the regulations are not crisp enough, they're not specific enough, and they don't justify objectively, there can be a misunderstanding, there can be a misinterpretation of those wordings, and there can be a non-standardized methods of insurance practices in a particular geography, and that can also lead to certain losses, though they are pretty less or minimal compared to the other 5 categories which we discussed. And of course I've put another one as others, which can be newer category which can come up, which doesn't really straight fit into the first 5 categories which we discussed. Now, having described the high level category of losses, we also need to understand that in each category we need to have subclassifications of levels of causes, which are 1, 2, 3, or even beyond that, and each cause needs to be coded accordingly. So it's important to have the causes listed down like a directory and have a unique code associated with each of them, which will definitely help analyze the extent of losses objectively. What is more important to understand is we may have hundreds of causes distributed or classified in levels 1, 2, and 3 across these 6 categories. What is more important is how do they impact, how each one of those causes impact the overall losses needs to be determined, and that's where the role of relative weightages come in. And here is where the experience comes in, the expertise comes in. But again, with the advancements of rich data getting captured, plus rich models where statistical sampling models coming in, plus rich experiences coming in, and technology like artificial intelligence and machine learning coming in, I think this is going to be taken care pretty well, which is not today the situation, which is still very manual today. But relative weightages to begin with, at least at a high level, that is level 1 categories, should definitely be uniform across the market. Where companies can differ is level 2 and level 3, specifically because of again the variations of processes and the guidelines they follow in their health insurance practices. And again, as I said, you cannot have a model which remains permanently as far as the classification of causes and the weightage and their respective weightages are concerned. The model needs to be dynamic. They need to adjust and edit as per the market developments, regulatory needs, and product performance. So tomorrow, let's say there's a new regulation which comes up in the market which prevents an insurance company from certain practices, but also allows insurance company to have newer practices develop. Now this parameters, the categories, the level of causes are going to change, because some of them will get deleted because of lack of that opportunity to play, or some of newer causes is going to come up, and that's why we mentioned the category called others based on that. So the extent to which this changes impact based on certain regulatory changes or market developments are not known in the first go, and it's important hence that there has to be a regular review of these parameters and the categories, depending upon the volumes of cases getting audited or the extent to which the audit has been used and the purpose for which the audit has been used, like we described right in the introductory stage, whether it is meant to only detect leakages or whether it is meant to benchmark a performance of one company against the other or one geography against the other. Audit maturity can be deepened as per the categories classification. Now again, we spoke about an horizontal spread of various levels of causes as well as the causes on each of these categories. Now there can be a vertical depth which can be again designed again based on the weightages of each of the categories and the purpose for which the audit has been used. So let me give an example. If the audit has been implemented to correct, let's say, claim assessment related errors, which has been probably suspected to be a major aspect of the total losses, or there are challenges in the claims assessment resource management perspective, then a lot of weightage needs to be given to the parameters at the levels which are belonging to the category for claims assessment, and we may probably play it a little low in the other ones. If we are looking at the purpose of the audit to find out if to find out what is the product performance, and also to find out the gaps to improve a newly introduced product or develop new products in the market, then there are a lot of weightages to be given to the policy related or the product related category of parameters here. So just to summarize here, that we cannot have one uniform set of weightages or prioritization allotted to the causes here. You need to play around based on purpose, based on the current market developments or standards, regulatory aspects, as well as overall this healthcare ecosystem. System-based approach can help move from sample to a full portfolio analytics. Now, traditionally, audits have been done manually, and even today, a lot of audits are done manually, and we don't have a trained system to conduct the same level of audit or same depth of audit as what a manual auditor would do. But the development needs to happen because the accuracy improves as the sample size improves, or as the parameters are much more holistically assessed. So use of technology to move on from a sample based approach to a full portfolio analytics, and including this as a regular operational step to identify and monitor the leakage trend specifically at a governance level, is going to be the most effective method of utilizing claim audit processes and expertise. So let's look at those categories in a little more details. So we said the first category is claims process, and some of the examples of claims process related errors would be like the data entry errors, or the claim type has been incorrectly mapped, or there's insufficient information or evidence available to take a decision, but the assessor has gone ahead and taken a decision for whatever reasons. There can be errors at a pre-authorization or a process related state. Now here is where we still don't have an information, because it's a pre-certification or authorization specifically issued based on the information provided more at a planning stage, just to provide a cashless benefit to the customer, and this can also lead to an error. And the reason being, there's a lot of chances of change in the medical treatment or change in the medical condition resulting in additional or edited treatment, or there can be even development of new things like complications or some additional medical condition, like let's say hospital acquired infections, or a fall or an injury. All these things are not in synchronization with the pre-authorization which has been issued in the beginning, or the subsequent pre-authorization, and sometimes over dependency on these can lead to some errors resulting into claims process losses. Moving on to the second category, which is the product related or the policy related. Now sometimes due to errors or oversight, which can be hard leakages, a claim is paid on an inactive policy. That can be a completely undesired kind of outcome. But these are the examples on the slide which are hard leakages, but there can be errors, or there can be scope of improvements which can be identified on the soft leakage part, or the process part, or the product benefit part, which serves as a good feedback to the product as well as the pricing team to either edit this product or bring in up new product with those changes already integrated. That's what I spoke about earlier, as more like using audits as a feedback tool rather than only loss detection tool. Claims assessment category are pretty much biggest category of errors happening, and here the error happens basically due to inter-observer variability of functioning between the two assessors, and that is how the that is how the importance of authority matrices, where individual claim assessors being allocated claims approval authorities based on their experience but also their current performance as far as the error rates are concerned, is important to be implemented. Now, the type of errors which can happen here can be either related to the beneficiary identity, and in many of the companies we have seen that the underwriting conditions have not been applied properly. Now, the person would have got screened at the time of underwriting, and there are certain underwriting exclusions or modifications being done for the risk at the time of inception, and just because the underwriting systems are independent and they don't really talk to the claim systems, in many situations, in many companies, we've seen that the claim assessors or the claims people fail to identify those underwriting risk adjustments, and they make claim decisions which are not in sync with those purposes at the time of underwriting, can result into losses. Some very blatant errors like policy terms and conditions not applied. Now, this happens, let's say a pre-existing disease, PED, being neglected, either they have not been identified, either the person was not able to identify that, and again it's a spectrum, since sometimes you get very clear documents and evidence which are dated prior to the policy application, so it becomes a non-disclosure. But sometimes you just get hints of those medical conditions, like let's say only signs and symptoms, and not really a complete medical diagnosis. The expertise of the claim assessors and the extent of medical knowledge or the extent of medical literature he understands, and the experience he had in handling cases of these types will detect the extent of policy T&C losses happening in the portfolio. And again, there's a role of the authorities matrix or the claims approval authorities issued to the assessor based on these kind of errors. Non-disclosure handling is something which is very, I would say, serious cause of claims loss today, and here is where the insurance company struggles a lot, because there's no clear guideline and there are no clear I would say referential experience for them to follow. Now, typically in an ideal situation, a non-disclosure should be referred back to the underwriter for a re-risk evaluation, and based on the result of re-risk evaluation, whether it has resulted into a material weightage to the non-disclosure or is it non-material. And also the other aspect of non-disclosure is more of insight, whether it was an innocent non-disclosure or whether it's an insightful non-disclosure. Again, depends a lot on the profile of the customer. Again, it depends a lot on the timing and the situation of the sale, and there can be influences like the distributor's influence, or there can be influences like people within the company, they are fairly acquainted with the proposer. There are many other reasons for why a non-disclosure happens in a particular period or a particular product or from a particular type of customer. So the philosophy the company has to handle non-disclosure is directing the claims process, which directs the extent of checks made and the extent of leakages identified. Now, this audit finding cases where there have been leakages purely due to non-disclosures and could have had a completely different outcome had they had some improved processes, or had they filled some of the gaps in their current guidelines, or their non-disclosure handling philosophy was much more stronger. These are great feedbacks from the audit results, which will improve the process on a long-term basis. Expert opinion errors, and as I said, because you're talking about health claims, you're talking about a lot of medical information getting interpreted, and hence is a requirement of experts like chief medical officers, consultants, who need to be roped in certain complex cases where understanding the association between two medical events and possibility of exclusion getting getting surfaced or unhidden, or the possibility of an intention of defrauding based on whether abuse or waste or fraud, which we spoke right in the introductory side. The experts can provide those kind of inputs more from the medical condition to arrive at these conclusions. And of course there can be others in the claim assessment which will, as I said, keep dynamically getting added into the model, and respective weightages to be applied to them. There can be others like payment related causes, which we described in the introductory slide, and there can be fraud management causes. Now this is something which again every company has got mechanism to counter frauds, and they do have list of fraud triggers where the cases, if they fall into that, need to be investigated. What is important is not only building initial fraud list trigger, because the situations are dynamic in health insurance. The updation of fraud management trigger lists in a regular fashion is something which is very important, and if that doesn't come up, you'll find cases where sometimes there could have been a better trigger, or the reference has been on an outdated list of triggers, and hence there is a loss happening. Quality of investigations, and again there will be different investigators contracting with the insurance company to identify the evidences which can result into a claim denial or reduction in the claim payments. And the quality of investigations is directly proportional to the quality of the investigators contracted, and that is also directly related to the experience of those investigators handling those kind of claims and situations, and how local they are to extract evidences and information from the environment. Training of these investigators, maintaining a department which overlooks these investigators from a quality perspective, and also having a real-time good distribution system for the claims as per the investigators' expertise. And we can even introduce something like specific authority grids for the investigators, the way authorities are there for the assessors today, for distribution of right cases to the right investigators for maximum outcome coming up. And of course now one big category is the provider driven frauds, and as I said again, if I explain the ecosystem in many countries today, and even in countries where there is a very strong connection between the payers and the provider, the aspect of provider driven healthcare frauds or health insurance frauds are very high in almost all the countries today. And it can happen basically because of billing errors, it can happen because of intentional unbundling of procedures, extending the length of stay, abuse of the provisions. So now this can happen because in many of these situations we have seen that an introduction of a new medical technology in a particular provider would result into an overuse of those technology, either in the form of diagnosis or either in the form of overtreatment. And all these things are somewhere reflecting into the payer's account as excessive payments or losses. So very effective provider driven contracting, monitoring, as well as accreditations, as well as communication with the providers are the key solutions which will come up for reducing these kind of losses, and they are the ones which most of the insurance companies today are struggling, because the moment you try and cover a particular type of loss, there will be other kinds of opportunities which spring up because of any new procedures and situation happening or experience maturing. One more thing important here is the medical regulators and the insurance regulators. They really need to work in sync together to maintain a good level of transparency and coordination between the payers and the provider segments today, to reduce the amount of losses happening because of provider driven situations in any geography. Last, obviously I explained this changes in the regulations or litigational things. Now in many of the countries we see that there are decisions taken in courts or ombudsman which probably are references towards guidelines should be built in an insurance company or in the provider domain. Sometimes you see decisions which are not in sync with the insurance philosophy, and they are more towards the customer propensity situations. Or now, and sometimes you get very hardcore scientific decisions made, but they may not be customer friendly. So in it's important that every insurance company as a technical product servicing company need to have a dedicated department, either legal or compliance, which needs to look at the experiences happening in the local environment, which can become referential and drive guidelines or edit guidelines for the insurance companies. And these guidelines which I'm talking about are the risk management guidelines, either underwriting or claims. And of course there can be others as a category which we spoke. Haven't spoken about the 6 major category of level 1 causes and level 2 and 3, and we also spoke about weightages that need to be given to each of those causes. Then what you're trying to do is we created a reference database to create an audit model, and the way a claims audit needs to be conducted with the purpose of identifying the extent of leakages goes through the 5 steps. And again, before we get into these steps, it's important that our claims audit needs to be looked after as a dedicated activity. It cannot be done ad hoc in a irregular fashion, because the maximum value is going to come up only when it is done in a regular fashion, plus it is done in a cross-functional way and the right people involved in that. So ideally speaking, an audit needs to be a combination of 3 teams, or at least the inputs from 3 teams. One would be the business intelligence team, which will provide inputs as to latest things happening in the industry, or some of the best practices which are coming up, which can feed into the audit model, and they can also help in identifying the true samples or the more appropriate samples for the audit. And the medical team, which will look after which are generally the core team which does the audit of the claims, and they are responsible to look after the technical aspects of leakages in each of those claims, and PMO team to just manage the claims audit process in a very structured way, and also maintain the frequency of the audits to see the improvements happening in the portfolio as a result of recommendations from the earlier audit. So that's like the team ideal way of looking at constituting an audit team. And the 5 steps which talk about is, first we should define the scope of the audit, the resources who will be doing the audit, the timelines, engagement plan, and a clear project plan to be established. Scoping is very important, and as I said this twice in the beginning, based on the purpose of the claims audit, the scope needs to be defined. And once you define the scope of the audit and the resources, timelines, and the engagement model, then based on that, the sampling needs to be done. And as I said, if you can probably look at 100% as a sample based on technology or the availability of manpower, that's going to be much more accurate and much better proposition than looking at a partial sample. But if most of the people don't have so much of luxury to do 100% portfolio audit, so a sampling technique is always important, and scientifically driven samples and can help do these kind of audits in a much more frequent manner compared to 100% portfolio analytics, which we cannot do on a frequent manner. Plus, sampling methodology also helps in identifying key risk factors which are affecting a particular performance of a product at a particular stage, rather than the portfolio, which may probably miss this kind of granular information or output. So there are advantages and disadvantages of going as per the sample based methodology compared to an entire portfolio based methodology. But once you've decided to go through a sample based methodology, defining the method template and the sample extraction data is very important. And many of the times you see the data entry is also a cause of error, but data preparation goes through a very extensive process because of a lot of information which are not useful for the claims audit. And once you have the data prepared, generated, sample defined, sampling methodology defined, the execution and extraction of the sample to be passed over to the audit team, by the BI team needs to happen. Now the audit team should have a clear checklist for reviewing those cases. And when I mean checklist, the checklist needs to have all the parameters in a organized fashion, right from one to the end, which will almost cover holistically all possible causes of losses, and as well as they are organized in a weightage based manner. So each item on the checklist needs to be reviewed by the medical team, and again, as we said, two different cases can have completely two different perceptions, and it is also dependent upon the audit team members' expertise. And because of so much of variability, this checklist serves as a good standard document, and it can result into a uniform documentation and uniform observation of those cases. So if at all there is a possibility of re-auditing or auditing the auditors, then this checklist is going to be one of the key input parameters to identify errors during the audit process. And of course, documentation, very important, as I said, because audit is something which needs to happen regularly, and to see the benefits the audits is bringing to the portfolio and the necessary corrections happening, you need to have a benchmark or a reference initial benchmark documented, and every other audit process then needs to be documented based on that to find the improvement trends as well as deterioration trends. And after the sample has been audited, the collation of the result and clear dashboard preparation and the report preparation needs to happen, and obviously the report needs to have the second part of the audit, which is a recommendation plan. So on each of the parameters identified as errors, and they've been thought after in consolidation with the other errors from the other areas of categories of errors, there has to be a recommendation plan which needs to be more operational and with specific activity and timeline documented, and that needs to come out as a recommendation plan which needs to be agreed by the audit team as well as the claims assessment team or whoever is responsible for the operational implementation of those recommendations. And of course there has to be a monitoring mechanism to ensure that those recommendations are happening as per the timeline suggested to them. Now in this complete cycle there are dependencies obviously, and these dependencies will clearly decide the quality of audit output. Now the first dependency would be the availability of data, whether it is sufficient, whether it is clean, whether those key parameters have been captured properly. Secondly, as we said, single audit and any ad hoc time may not really give enough information, so you need to have an auditing strategy signed off by the management, and implementation and allocation of resources, timelines, and a dedicated plan for an audit needs to be very much there in place, and the extent of that being in place is going to be a huge impact to the quality of audits happening. Use of technology during the audit, either in the stage of extracting samples or collation of data or using analytical tools to bring out those trends in the audit report, is definitely going to be impacting the quality of the audit output. Training and understanding of the audit team, the experience of the audit team, what are the local practices which the BI team can provide as a reference. If there's no BI team existing in the claims department, then the claims assessors take up that responsibility of identifying the local practices which influence the claims decisions today, and to be kind of used for appropriate weightages in the causes part. Guidelines, authority matrices for the competencies of the assessors, and as I said, there can be multiple other dependencies which we keep learning as new things as we do more and more audits. So this is in nutshell the audit cycle, or an implementation or a concept of an implementation of an audit for claims to identify the leakage rates. Now once you have implemented this, look at as a dashboard, what comes out as an output of every audit is what are the errors identified and what are the value of those errors. And here is where the weightages for hard leakages, the weightages for soft and the the process errors come into picture, and they throw an objective output here. So we can also have a dashboard which taps into information like the top causes of losses and specific concerns related to those causes, top mitigation recommendations, and with specific timelines allocated for them. And a typical audit outcome report should it start from a very high level information on the total leakage rate, let's say 4%, 5% on the overall leakage rate, and then with complete detailed breakup of that leakage percentage based on those top causes, as well as overall distribution of those causes. And then it should also kind of once, and it may not be possible in one audit, but if you have multiple audits done over a defined frequency, you can identify the trends, and that trends can help you extrapolate to forecast, assess, and recommend strategic actions for better management of the health insurance portfolio in future for the insurance company. And if you really look at the components of the audit dashboard and what kind of parameters you need to report or assess, you can have multiple parameters, but the common ones which are generally reported and which are pretty much useful for the insurance company to monitor and improve on are leakages due to definitions, like I said, hard, soft, process errors, business decisions, or overpayment of claims. Leakages due to line of business. Now the company may have multiple lines of business or multiple lines of distribution. You can actually segregate based on those. Sum assured wise, leakages due to claims type, leakages provider wise, and here you can get really deeper and find out what category of providers, what kind of medical conditions treated by the providers, surgical versus medical, providers in a specific geography or a particular time frame, or a specific physician or a surgeon within a provider. You can go to many levels of depths of analysis from the audit results of causes of losses due to provider driven category of causes. The claim condition, procedure wise, claims process wise, contractual versus business decision wise, and breakup of the billed amount wise. Now this breakup of the billed amount wise can help you identify certain errors happening at the provider end for either the overbilling kind of component, duplication kind of component, or it gives you a technical information by analysis as to where is it currently that majority of the claims outgo is going to. So for example, in surgical cases, we may realize that a majority or component of claims outgo may be because of the implant cost or the surgeon's fees. But in medical, let's say you may get a picture that majority of the cost is going towards, let's say, pharmaceuticals or drugs, and this information can help build certain operational processes to curtail cost in future. One example again is contracting with the pharmaceuticals to lower down this pharmaceutical cost in the network providers where the claims are coming from. So you can have a dashboard with leakage parameters analyzed on these common parameters, as well as there can be multiple ones which keep developing as the experience matures. What's also important, as some of these parameters may be internal and they need to be completely delineated for integration advantage. When I say integration with the GI audits internally. Now why it needs to be clearly delineated is because the detection of true beyond control leakages are some things which are very much important to be known. We said health insurance is a subject where nothing is objective, and the predictions may not be only driven from the data experience, and there has to be a lot of uncontrolled or beyond control kind of category of things which can happen. And to identify the extent of those beyond control leakages is indirectly meaning to say identifying the leakage rates which are pretty much within control. And once you integrate these audits with your internal GI audits for an operational excellence to reduce the operational cost of auditing, but also to understand what are some things which are beyond our controls, and that can help us provide feedbacks for pricing perspective that we cannot really control these, and hence it's better to accommodate that in our overall pricing. Couple of other key points here is like any change in the parameter of the weightage should be assessed independently to decrease the trend corruption. Now what does it mean by that is there can be a false trend, or we call it as trend corruption, or edited trends which can come up as an output because of change in the weightage of the parameters. In an ideal situation, a trend observation is more accurate if you don't change the weightage on the same portfolio and the other constants. But in case, as we said, because audit has to be dynamic and the parameters and weightages need to be changed, you need to weigh a particular, or need to correlate a particular trend observation to the changes made to the parameters and the weightages over a period of time to avoid false positive or false negative trend interpretations. And it's important that data fields to be captured nearly to be clearly extracted, refined, part of the training to the audit team. Now sometimes what happens is auditors are called from a completely new geography, or different experiences, to avoid biasing, but it's also important for these audit team to understand the value of each of the parameters, and hence a little bit of pre-audit preparation with this allotted team to make them understand the base level experience and various parameters getting captured and some of the parameters not getting captured, some of the local market practices which as we said can result into business decisions, certain guidelines which are more local in nature may not be in sync with the global guidelines, and all those preparatory part to the audit team can definitely help them operate in a much better way, or much local way, or much more optimal way. And again, this is a traditional concept which we discussed till now, and there are a lot of advancements happening. There are a lot of newer concepts in auditing coming up, and the claims audit for leakage rates is definitely not immune to those. So it's important for even those newer concepts to be tapped and tried and incorporated in your current processes. So some of the examples I've listed down here, and there can be many other. There can be advancements which are happening in sampling. There can be moving on from sample based to a full portfolio assessments. There can be retrospective versus predictive and forecast. Now this is something, a big development happening in predictive analytics today, and you can use claims audit feeding into the predictive models for understanding futuristic trends and forecasting, and replacing the manual auditors with automated systems tomorrow. And for non-complex related things you can definitely use systems, but the cases where you need a lot of manual expertise and interpretation, you probably still a lot of time ahead to integrate systems into that. Use of artificial intelligence and machine learning to completely refine the models in a regular way, and advanced tools to tap unexplored evidences like social media. Now these kind of informations are generally used at the time of claim processing, and there will be advancements happening in that domain, but the same thing also needs to be feeded into the audit model down the line. Medical protocols inclusion, advanced IT tools like IBM Watson. Now medical protocols are something which the claims team generally are incorporating them either in the form of a manual way or in the form of a proper guideline getting integrated, and there are technology solutions also helping integrate clinical guidelines with claims guidelines today, and all these things will have an impact on the parameters and the weightages which are used by the audit framework or audit tool. And hence it's important that even an audit framework needs to get revised as per the similar changes happening in the claims process. In fact, in this just to summarize, any changes happening in the claims process, whether in the form of guidelines or people or technology or tools, similar changes need to be reciprocated in the audit framework, either in the form of parameters, categorization of the causes, or the respective weightages given to each of them. So that's it, and thank you again for having so much of patience to listen to me, and I hope in this presentation I have kind of given a little overview of the concept of claims auditing from the perspective of identifying losses in health insurance, what are the different types of losses happening today. And of course it's important for the insurance company or its subsidiaries who are investing in the auditing tool to identify these losses, to be abreast with the latest technology and happenings, but also before they create their customized audit framework. And that is what the intent of this presentation is, to help feed in all the information needed to create a customized audit framework to detect losses today. And if there are still some support required from an operational perspective to any of you listeners who are involved in auditing and want to create an audit framework, you are very much I'm very much happy to extend the support to you guys. You can see my email ID on the screen, and you can write to me if there's any kind of business support or operational support required to build an audit framework or implement an audit strategy or actually conduct an audit to identify the extent of leakage rates and the various other parameters, identify trends in those, all that we discussed in this presentation. Thank you very much again.